Hello, I'm Mitch Goldberg. Welcome to my live stream. It's called Be the Boss of Your Money. It's about personal finance, investing, financial planning, lots of things related to those topics, important stuff. The goal here is to make sure that you could walk away a little bit, hopefully a lot of bit more knowledgeable about your personal finance so that you could reach your financial goals. My name is Mitch. Be the boss of your money. Thank you so much for joining me. Your time is valuable, and I greatly appreciate that you're sharing some of it with me. We've got a few things to talk about. Stocks are stuck between the usual battle: stimulus, rising COVID cases, and mutations. What is a transfer on death account? Why should you know about it? And why is it so important that you actually take something like that idea, TOD accounts, pretty seriously? I'm surprised at a lot of people who don't take them seriously. So what else we're going to talk about is GE back, baby. That's a very important issue because GE used to be such a widely held stocks, one of the most widely held stocks in the whole world by investors. And there's a message though from GE. There's something happening with GE that is starting to become positively pervasive and could actually be the key to unlocking the next big uptrend, the next leg up for the stock market. So let's get into it. We're going to roll the intro real quick. We've got a couple of cool things to talk about. Stick with me. This is going to be good. You're going to learn something new. And I am going to really enjoy going through this experience with you. If you're watching this in the live stream, please go ahead and ask me any questions you may have about these topics. And if you're watching the replay, I'd like to welcome you as well. Certainly ask me your questions as well. Here goes the intro. All right, we are back. Let me know how I am coming in. I'm playing a little bit with the volume here, and I don't know, somehow playing with the volume in the middle of a in the middle of a live stream is probably never a good idea. There were better ways to go about that. So let me know if you could hear me. We've got a lot of things to talk about. Let me know what you're thinking. We already have a hello out there from Maddie. Matt, how are you? Big Mitch, thank you, my brother. So nice of you to say that. What were you squatting the other day on Instagram? Was it 375, 415? I forget what the weight was, but you weren't just doing like one rep. You were doing like reps. You were doing sets with that crazy weight. I mean, the bar was actually bending down. So good to see you, my friend. Thank you for joining us. The volume is all the way off on the Dell computer that I'm using, but darn it, man, I had such a good show planned. And now I am just looking at a screen that says that there's something with the master volume that's not working quite right. Okay, the microphone says it's working. So let's keep this going. Okay, and I'll have to deal with it, grin and bear it. So thank you so much for joining me. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. We've got a few big topics to talk about. Stocks are stuck between a rock and a potentially good place, which is the stimulus. Then we're going to get into what is a transfer on death account. I don't mean to be gloomy and, depressing talking about the word death, but it's an important thing. Listen, we talk about estate planning here. We talk about writing a will and what goes into those things. So these are the things we need to talk about today. So I want to get underway and make sure that we have volume in this episode. Man, I am never going to make that mistake again. I played with the volume on the Dell because it was so out of my ears. So I really hope it's coming through here. I have to check this. I don't mean to look down while I'm doing this, but we got to go here. Get underway and make sure that we have volume in this episode. Man, I am never. All right. We're good. I feel like I should start the show all over again. So let's talk about the stock market. We've been talking about a consistent theme here on Be the Boss of Your Money that the stock market, the economy rather, should really have, in my opinion, a very big, powerful uptick in strength. And I know that's a widely adopted view now, but when I started talking about this, it was a minority view on the street. And what I mean is this, that once we start having enough people inoculated, enough jabs and arms with the COVID vaccines, stimulus comes through, infrastructure spending comes through, people start getting back to work, feeling more comfortable in terms of traveling, going out to restaurants, pent up demand, you could really see a very, very strong economy sometime in the second half of 2021. But until we get there, we're still faced with various lockdowns. COVID is spreading like crazy. There's a Brazilian mutation. There's a South African mutation. There's a British mutation of this virus. There's an American mutation. And people are worried. Will these COVID vaccines even work against those strains? Some of them, yes. The CEO of Moderna and Pfizer said the same thing, that they expect to quickly come out with booster shots to make sure that the vaccines are current with any new mutations that are discovered, and it makes the vaccinations more durable, it gives them a wider spectrum of effectiveness. Let's do a quick share screen. I'm going to share the screen. We're going to take a look at today's action, give you some perspective on this. It's important that we get this. Okay. So let's take a look here. Do you see the Dow off 23 points, S&P off about 5, NASDAQ down 0.07 and the Russell barely off also. Today was about as beat, ho-hum, and boring of a day. There really wasn't a lot going on. I would say we were up a little, down a little all day, but nothing major. I think investors, the market was also marking time to get to some of the big earnings reports that start tonight, in particular Microsoft, which we're going to take a look at that in a moment. And then what else do we have here? Let's take a look at the big winners of the day. Communications was a standout winner of the day. Real estate, consumer staples, technology was barely up, basically flat. You could see that. I hope you can see that on your small screen. And at the bottom of the heat was energy, building materials, utilities, and industrials and financials, which is not a good indicator for the economy. Generally speaking, if you're optimistic about the economy, if investors are bullish on the economy, you'll see financials, industrials, materials, and energy go up. So just want to point those out. But overall, it was just a mixed day, not a lot going on. I think the big story is, again, we're going to seesaw between the work from home, stay at home stocks and the economically sensitive stocks. And we're going to go back and forth. But this is significant. I think something can change with this. Okay. I think we're about to see a change where both could go higher. Like I'm talking about, maybe we have to consider a whole leg higher. The Federal Reserve has promised that the Federal Reserve has promised that it's going to keep interest rates ultra low through 2022 into 2023. We just started 2021. So the Fed has its job to do, and they would be loath to go back on their word unless they really had to. It is a concern that if the economy heats up too much, then the Fed will have to act, raise interest rates, restrain money supply a little bit, tamp down growth because they're worried about inflation. But there is also so much capacity for everything, both mind and man-made in the world, that it's really hard to see inflation picking up anytime soon. These are just things that we're looking at. You can come up with whatever forecast you want. I consider a forecast a starting point, kind of like a financial plan. It's a starting point that has to have lots of opportunity for flexibility built into it. Okay. So let's take a look at what I think is so significant. We've got mechanical news. Look at this. GameStop up again today, The stock is trading at almost $200 a share in aftermarket trading. That's after hitting a new high today of 159. It hit 150 yesterday, closed in the 70s, and now it's back up. It's at 200. And AMC Entertainment is another stock that's a very small cap stock, beaten down company. Same thing with BlackBerry, beaten down stock. And these are considered low quality stocks. There were much better quality companies like Microsoft and other companies. So let's just stop sharing the screen for a second, okay? So one of the some of the things we need to look at in terms of what's going on in the stock market is that what you're seeing with GameStop, these are really mechanical trades, market mechanics, short squeezes. Investors, after seeing GameStop go up so much, so hyperbolic, that they're looking for other formerly big name companies that are down in the dumps, whose fundamentals are so impaired it's even questionable if these companies could survive. And these have big short positions where investors are betting that they go down. And if you bet on we covered this yesterday. If you bet on a stock that goes down, if you want to get out of that bet, you have to actually buy the stock back. But once you start buying the stock back and everybody else starts buying the stock back, that buying demand, more buyers and sellers, sends the stock way up, and everyone else who's underneath, who's still shorting the stock, betting that it goes down, starts to get squeezed out because they're starting to lose so much money. So that's what investors are looking for. But those are mechanical things that are working in some of these stocks' favor. But the real deal is what are the higher quality companies that we like to work with in our shop over here. So we take a look at Microsoft. Microsoft had a massive jump in earnings, hit a new all-time high. The 52-week range top was 234. It's trading at 240. It's up over $8 a share in aftermarket trading. So that I think puts us in a pretty good mood for a pretty nice open in the morning tomorrow. But when you see a company as big as Microsoft, 17% gain in revenues, their cloud business is just booming right now. That just speaks well as that these companies are not hitting the barrier of the law of large numbers. And if you recall, we spoke about this last week. Netflix had a huge number. The stock was up 18% in one day because they had such a blowout number. Netflix said they can stop borrowing money. They're going to start returning money. They're going to start returning cash to investors through buybacks. That was totally unexpected. But these giant mega cap tech stocks are actually doing better. Their growth is accelerating in spite of their size. So we could see a whole new liftoff. Apple has been doing well. So let's take Apple reports earnings tomorrow. Let's take a look at GE. GE's numbers came out today. The stock is still below its 52-week range. Technically speaking, when a stock breaches a long-held 52-week range, stocks typically go up a lot more. That's how the mechanics, the technical aspects of trading work. Okay. If you're a technical analyst, you like to see that. But the stock had a nice day today. The thing is, they had a decent earnings report, but they had good cash flow. And their cash flow is coming back a lot sooner than people expect because GE has made the leap to ESG, their clean energy, and they've cut costs. And that tells you something about GE. And 3M also had a very good earnings day. The stock was up over $5 today, up over 3%, strong earnings. And GM, you saw last week that the stock hit a new high, getting into electric vehicles. But what does GE, 3M, and GM have in common? All right, let me make sure I'm sharing the screen. So Microsoft up over $8 in aftermarket trading. GE had a nice update today. Let me get back to that. Microsoft pops in aftermarket trading, new 52-week high. GE not far from its 52-week high. Had a nice day. Cash flow positive, cash flows coming back strong much quicker than people expected. 3M had good earnings growth for the first time in a long time. That stock's been dead wood for a long time. So now 3M and GM again, getting into electric cars, and their earnings have been doing much better than expected. What do these three stocks have in common? I'm going to tell you. This is why we might get rid of this seesaw pattern between the super large cap work from home, stay at home stocks like FANG-M, Facebook, Amazon, Apple, Netflix, Google, Microsoft, and the other, cohort of work from home, stay at home stocks. Okay. And so we might go between those stocks. We've been going back and forth those and the economically sensitive stocks. And the economically sensitive stocks, like industrials, financials, building materials, energy. So we've been seeing a resurgence in those kinds of stocks, economically sensitive stocks, for the better part of the last 3.5 months or so, on anticipation of a pickup in the economy and that booming economy we are all expecting in the back half of this year. So it goes back and forth. But what I really want to impress upon you is that the industrial type stocks are all of a sudden making a lot of money. They're doing very well now, ahead of the resurgent economy we expect in the back half of 2021. And they have something now called operating leverage. These companies have cut costs so quickly, they've laid off so many people, gotten rid of deadwood, sold off assets, that just a small uptick in earnings, a little uptick in revenue, has a very big impact on their earnings because these companies are so lean. So these companies' earnings, they can start to grow like they're hot growth companies again, like growth stocks. That's what we're seeing. That's what operating leverage means. And we see strong operating leverage typically after recessions. We saw this after the tech wreck. We saw how a lot of companies came back. That was a recession, and that time was a shallow recession. We saw this big time in 2010, 2011, 2013. We see a massive amount of operating leverage coming out of a deep recession. And I think we see better operating leverage than ever in industrial, economically sensitive type companies. But on the other hand, you're still seeing the work from home, stay at home stocks, semiconductors, et cetera. They're still doing incredibly well. It's not like they've slowed down yet. So instead of having the seesaw between work from home, stay at home, and economically sensitive, instead of that, I think you're going to see both of them start to do well at the same time. And that's what could lead us to the next leg higher in the market. I'm pretty bulled up. That is being fought back with stocks like these over here that we keep talking about, that everybody's talking about because they're kind of fun and exciting. But if you look at like GameStop, okay, up $72 in aftermarket trading. That's crazy. Stock's 220 on GameStop. About 3 minutes ago, I said it was almost 200. Now it's 220. Hopefully somebody can trade that if they want to sell in aftermarket trading, but there's not a lot of volume in aftermarket trading, and people are just getting squeezed to death in a short squeeze. AMC, BlackBerry, people are looking for these short squeeze type potential stocks, but they go up. These companies are not healthy companies. The stocks aren't going up because they just discovered the cure for cancer or some pie in the sky thing. These companies are going up simply for market mechanics. All right. So people are saying that, if these stocks go up, there's too much euphoria in the market. People are speculating too much in the market, and that's not a good sign. That's a sign of a top. I think that maybe these are isolated events. People said the same thing last March and April and May when the lower price airline stocks were starting to go up a lot, and people who bought them were actually right to buy them. And that's my story. I'm sticking to it. So let's take a look at the next topic, okay? And the next topic is transfer on death account. So I want to show you a couple of things. And the first thing we're going to do is put this up on the screen, transfer on death account. Stick with me for a second here. This is a big topic. This is a financial planning topic. Transfer on death account. On a non-retirement account, designating a beneficiary or beneficiaries establishes a transfer on death registration for the account. For an individual account, a TOD registration generally allows ownership of the account to be transferred to the designated beneficiary upon your death. Okay? So that's kind of gloomy, but the point is, I am very surprised that when I have clients who come into my office, new clients, and they have an established plan, a will, an estate planning plan. They have everything put together, the full estate plan. They've worked with an attorney, and they come in with individual and joint accounts, and they're just individual or joint accounts. They're not transfer on death accounts. You know, if your name is John Smith and Mary Smith, it's the John and Mary Smith joint account. You could make it the John and Mary Smith TOD account also. It's just simply a transfer on death account is a way of putting a beneficiary designation on an account that's not an IRA or a 401k or an insurance policy. Okay, that's what a transfer on death account does. It doesn't protect your money from, it doesn't hide your money from Medicaid. It doesn't protect your money from lawsuits. Okay, that's not what it's for. It doesn't shield your money, but it's simply a way of saying, I want my money to avoid probate. I want my money to go directly to a beneficiary or beneficiaries. And the beneficiary or beneficiaries could be people, or it could be an estate account, a trust account. You wouldn't want it to go to an estate account. You'd want it to go to a trust account. So forget that, not an estate account, for a trust account. That's what a transfer on death does. It provides a beneficiary designation for a regular taxable individual or joint account, bypasses probate, so that you can make that money go to the person, people, or trust account that you want it to go to. Probate, and let's see if I have the definition up here. We have that. And okay, so I had the probate definition up here. Okay, here it is, right here. Okay, I hope you could see that. Let me see if I can make this a little bigger so you could see it on your smartphone. But you've heard the term probate a lot. Probate means that if somebody has a will, it's got to be basically authenticated and validated in a probate court. So it's just got to be certified, legitimate, proven legitimate, and it could give other people, outside people, a chance to contest the will. That's right. Just because somebody makes a will doesn't mean it's final. It could still be challenged. So what you would do then in that case is you would have your assets planned so they would go to the people or accounts or trusts that you want it to go to. That's why it's so important to make that a big part of your estate plan. Now, different states treat transfer on death accounts differently. They don't all count the same assets as the same. So it's very important that you speak with your attorney, with a qualified attorney in the field of estate planning in your particular state, to make sure you're doing it right. Don't just, pick up the phone tomorrow and call your financial advisor and say, oh, hey, I have to move all of our accounts into TOD accounts. You have to figure out if that's the right step you could take for your state. And if you leave a beneficiary, and if you have a beneficiary in a TOD account, and the beneficiary predeceases you, for example, the account owner, then your account could go into probate as well. So it's not foolproof. So you have to make sure you keep your estate plans updated. So that is why that is so important. I want to thank you very much for watching. I hope this was helpful to you. On that note, we're going to end this. I'll be back tomorrow with more good stuff, coming your way. Personal finance, that's what the show is all about. If you want to catch more shows like this, you could catch me on YouTube. What I do is in these videos, I break the important points down into little snippets, sometimes a minute, 2-3 minutes long, and then I post all the important points that I make in my live stream, and I put them on my YouTube channel, which you could find Client First Strategy on YouTube. All right, take a look at that, and if you like what you see, hey, maybe consider subscribing. I'll end this broadcast now, and I'll see you tomorrow. Thank you so much.